It's over. The stock market crashes here. We now have 2 weekly lower lows in a row. And the only piece of evidence we are still missing is this bearish engulfing candle we talked about on the NASDAQ this weekend. We got a hot CPI print, which we're going to talk about in a few minutes. But first, we're going to talk about all these warnings we already have had so far, which include a lot of them here. Pause the video if you want to see each individual one. But really what it comes down to is that we've already started a little bit of a dip, right? A 1% drop. And if we get this other bearish engulfing candle on the S&P with a weekly lower low, it means the crash is here, which means we should be looking for moves potentially as low as 4% or maybe even 8%, God forbid. That would be almost a correction or a crash. So what happened today? Well, everything went lower. Take a second to look around, right? Meta, NVDA, that's about it. Almost everything else is red. So what's really interesting about this inflation story is that it's not just a hot inflation story, it's a hot GDP number. So this will be very important because we are going to be talking about earnings later this week. Remember, we just got through the number one most important data point for the week. We got through the Fed minutes and you probably didn't even see a headline. I didn't. So what does that mean? Excelente. We're hearing from people like Bullard saying 3 cuts is the base case for this year. So like, what the hell is going on out there? Bank of Canada also holds key interest rates at 5%, says things are moving in the right direction. We are seeing what we need to see, but we need to see it for longer. That sounds pretty familiar. That sounds like Jerome. Just do it already, right? Just do it. McClem said that a rate cut in June is within the realm of possibilities. Cool. So why would they be talking about this? It's because we've talked about we're too restrictive. If we now go here to our pre-market stream, we talked about this on the video. I will leave that for you at the end here as well. We talked about the Fed being too restrictive. Remember, they don't care about CPI. They care about PCE. And right now, looking at this formula, they're too high by about 1%, which means they should be cutting. But right now, the market is saying there's an 81% chance of a pause. For July, it's going to be a pause. For September, hey, maybe we get a cut, 44%. And then looking at the other possibilities, maybe we do. By November, not even a 50% chance of a cut. It's over 50 when we include these other numbers here, but just straight up for 500 or 1 cut, nope. And by December, hey, maybe 1, maybe 2. But if we look here to what Biden says there will be a rate cut before the end of the year. I thought the Fed was not supposed to be political. But what happens at the end of this year? Oh, that's right. We have an election. So September was a pretty big coincidence for looking for the first Fed cut. So why would they do that? Right now, we see that inflation or CPI is currently going higher with higher highs. We note the year over year is currently forming higher highs, right? We look at charts. Well, those are higher highs. And notably here on the month over month, this is what is currently causing the concern. But like I said, the Fed doesn't care about CPI. Maybe market participants do, but the Fed does not. And who cuts rates? It's the Fed. So what matters for the Fed is PCE. And I still think they're going to cut. So if the market's going to be surprised now, and again, James Bullard was like the bulldog last year, right? Oh, we got to hike. We got to hike. We got to stay higher for longer. He's saying 3 is the base case, not it's possible, not saying it's within the realm of possibilities. He's saying this is what the Fed should do. They should cut 3 times. So if the stock market crashes here, like I mentioned at the beginning, did we just survive the stock market crash of 2024? Is it over? Why? Well, remember, we have earnings kicking off later this week. So we got through CPI, we got through the Fed minutes. Everyone was chirping last week. We talked about that on the last video. So with earnings kicking off on Friday, here's what I want you to think about. If inflation is going up and the GDP is expanding, what happens when inflation goes up and the GDP expands? It means the companies that make up the economy or the 500 most elite stocks in the world, the S&P 500, are probably going to do well. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. Sorry for being a little bit late on today's video too. Had a little bit of difficulty with my recording software, so I'm sorry about that. But anyways, let's push forward here. So Biden's out there saying it's time to cut, boys. So what should we do? Man, it's time to cut. So what I'd like to do is just take a quick step back here to the notes we prepared on the weekend and then look at a couple of daily charts. So here we talked about how we had a lot of engulfing candles. So it means that we're starting to see higher highs and lower lows. What's going to happen? Again, we talked about this on the weekend. What's closed down the week? Man, everything momentum. So With those ones going down and these ones going up, like volatility, silver, Meta, copper, 10-year note, gold, oil, energy, and Amazon, things are starting to get a little bit more peculiar. And I say that because right now there is this massive unknown, right? There is a possibility, again, pause the video. I don't want to say what's listed here, but this could cause the market some anxiety. Why? Just read it, please. The saying is that we take the staircase up and the elevator down. So as important as earnings will be next week, I've been talking about this warning for so long now that you might be a little bit tired of hearing it. So what does that mean? I've probably done my job. My job is to make sure that you understand that there is risk out there right now. And after we've rallied incredibly, right? Let's go back to the S&P now. So the S&P has rallied, only gone down 3 out of 22 times ever since we formed our low in late October, which means it's been a nonstop move higher. And if we're currently on support, which would be at roughly 504, if we don't hold this weekly low, that's really constructive. But I want to show you something here. Actually, a few charts I want to show you. First one I want to show you here is actually ES. And I say that because we have a double engulfing candle here, right? Higher high, lower low. But what's so interesting here is that the bulls failed to close over the previous candle high. If we now zoom in a little bit, what do we note? Well, today's a very bearish engulfing candle. We closed below that previous low as well. So because this data came out at 8:30 a.m. this morning or pre-market, we have to look at the pre-market action, which is only going to be on ES. So engulfing candle below the low. Look right here. We got 3 in a row. Why does this matter? Again, I showed this to you on the pre-market stream this morning. I encourage you to watch all the way until the end if you want to see this, though. So we talked about this engulfing pattern, and what's so interesting is that the last time that I can just remember seeing this pattern here is actually on the NASDAQ when we had the SVB crisis. So the NQ also had the same pattern here. What do we have? We have a double engulfing candle. We got 1, 2, and then finally a third. So honestly, I don't know where we're going to go from here. What I do know is that fear and greed is now starting to reset. We're now at 50 something. So we're out of greed, but we've been there for a long time. A year ago, a month ago, a week ago, yesterday, and today we're back into greed. So is it within the realm of possibilities? Well, just say you're going to do it then. Do it. Like Nike says, do it. 3 times, let's do it. Let's cut. Let's get these interest rates down. Let's make stonks go up again, right? Make stock market great again. So what'll be interesting for me is when we look forward to Thursday, which is going to be, I believe that's going to be, that's tomorrow. So what's going to happen tomorrow when we get PPI? If it comes in soft, right, from 0.6 down to 0.3, that's great. Remember, producers produce, consumers consume. So when producers have a higher cost in the previous reading or last month, what do? They pass it on to the consumer, right? Oh, is that what happened today? I don't know. But oil has been on a tear. So that headline I shared with you before is starting to sound a little bit scarier, and that could definitely throw a wrinkle in everything here. So all we need to do is follow the levels, right? Follow the levels, follow the plan, and be prepared for a move lower. All right, so I told you about this engulfing candle, and I want to show you that it's not just happening on one chart. So on the NASDAQ, we talked about how we have one engulfing candle so far. And all it's going to take is going to be a weekly lower low, like what happened here, 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 or most times on this pattern here. Ironically, this is one time that we did not. Engulfing candle closes below. That was a trap. So what I really want you to focus on here is that this double engulfing and potentially triple engulfing pattern just means that as we form higher highs and lower lows, the bulls get momentum and the bears get momentum. Whichever way the coil decides to explode, it's usually a very big move. So why does this matter? Because you're doing a lot of talking. Well, it really matters because if we go here to NQ for 1 second, we note that same pattern here. Higher highs, lower lows, closing below that low. Look at the Russell. Pretty big bearish engulfing candle here today. Yep. Look at the Dow Jones. Engulfing candle, closing below the low. Okay, so it's not so pretty out there. But again, tell me why this matters. I'll tell you right now. Because charts can do 3 things. They can go up, they can go down, or they can go sideways. Pretty easy to see here that after we lost the most recent uptrend, we're not going up anymore. So what are we doing? Well, I would argue we're going sideways. So we can either keep going sideways, we can go back up, or we can go down. The part that I find really, really interesting is that we're right here on the 50 moving average. We did not close below it. So like I said, if we break this chart, the weekly one, and we fall below last week's low and close below it, the note says that we're going to be closing below that 50 DMA, which means that the daily chart is now confirming we're moving sideways, and we're likely going to start moving lower. So that's it for today's video. I talked about all of this on the weekend deep dive. So if you want to see that, that's now queued up here on the left-hand side. If not, maybe you want to subscribe to the channel on the right, review that video from this morning, or come hang out with me at 9:15 a.m. tomorrow. Thank you so much, and I'll see you tomorrow.